Levent Fed ve ekonomi muhabirimiz Michael McKee ile birlikteyiz. Michael, thank you again for coming. I want to start right away with the two Fed presidents and their speech and how it affected, or maybe not, the equity markets, because that's how it seemed. But Rosengren talked 2 days ago, and then we saw the markets moving up because he said that it should be an open-end easing. And then yesterday, Fisher talked, and then we saw markets going down. Are the markets really reacting to these two Fed presidents? What's going on, and why are they disagreeing?
Well, thin markets in vacation month of August lead to some exaggerated swings for the short period of time. You saw that their comments sort of washed out of the markets by the end of the day. But we're getting ready for the next Fed meeting in September, and the people who were involved are staking out their positions. Eric Rosengren, probably closer to the center of the group, looking for more stimulus for the economy. Richard Fisher representing those who believe the Fed's done enough and doing more wouldn't help the U.S. economy a whole lot. What it's going to come down to is what Ben Bernanke thinks. He has the votes on the committee. Whichever side he aligns himself with is where the U.S. is going to come out. We'll hear from him in Jackson Hole at the end of the month.
What do you expect from Jackson Hole, Mike? And
well,
are you going there, by the way?
Yes, I'll be there.
Okay.
Over the last 2 years, we've seen Ben Bernanke sort of lay out the Fed's policy options for the next several months in a speech that he makes there to kick off the economic conference on Friday morning this year, the 31st of August. So it's going to be very interesting to see whether he does that again and whether he leans toward any kind of easing. The last 2 years he did. The markets reacted strongly, and so we'll see if he's being influenced by either side.
So there might be a surprise, do you think? Because 48% of the economists think that Bernanke will leave the easing to September 12-13 meeting, but do you think we can expect a surprise from the Jackson Hole meeting in terms of some kind of easing?
Probably, well, not easing, but he'll talk about it.
Stimulus.
He'll
right?
talk about the fact that they may ease because the Fed doesn't like to surprise the markets. So if they didn't say anything leading up to September 13th, then you would have very large reaction in markets to whatever they did. So he'll set the stage. You'll see a reaction in the markets, but they won't actually ease until the Fed meeting.
I'm glad you said that those two Fed presidents, they don't even have the voting right. Bernanke has, so it all ends up with Bernanke. But because they don't have the voting right, do they feel comfortable to talk about these? What is the reason for their speeches? So
well, all of them do. All of the Fed officials have been speaking out a lot more in recent years. They feel comfortable doing that, staking out their position. It's a little bit of politicking in public, trying to convince other members of the Fed.
Politicking in public. And what is the reason for that?
Well, they're trying to influence other members of the Fed, influence economic thinking, perhaps influence some of the editorial writers, people like that, just sort of the same way that members of Congress would do about a vote coming up there.
I like that, but it's good for our Turkish audience to know this as well. So let's go to Europe. If there is any easing in Europe, how would it affect to the U.S. and especially dollar?
Well, there would be an effect, but it would probably be something of a wash, because while an easing in Europe would hurt the euro, would lower its value and make it European products more competitive against the U.S., taking away from the U.S. on the trade side, a stronger Europe, because they eased, would buy more stuff from the U.S. So it would probably be something of a wash.
It's a wash, yes. And so let's go to the U.S. If there is a possible, if either in September or maybe later, but I think we're expecting before the elections in November, right? Everyone is thinking about that.
Well, it's going to be September, or they would be on hold into December because they won't move right before the election.
Okay, but if they do it, who would benefit from it, Mike?
Almost nobody. At this point, it's hard to see a whole lot of benefit other than perhaps keeping things from getting worse. What they're talking about at the moment is trying to target the mortgage business, try to lower mortgage spreads, but mortgage rates in the U.S. are already at historic lows, and it's not generating a whole lot of business. Banks say they don't have the staff to process a lot more mortgages, so it's hard to see how we get a huge effect from it.
And how much would it be, the magnitude, the size? You said that it would be in the form of mortgage.
Well, that's an interesting question, because they have the size of their interventions in the bond market have gotten smaller over time, and now people like Eric Rosengren are saying we shouldn't put a time limit or an amount on it. We should say we're going to buy bonds in an open-ended fashion until we get the economic result we want, whenever that is.
And Fisher says that the reserves on the banking system is already huge, and it's not going to benefit anyone, and the limitations are too big right now for Fed. And also he's talking about the regulations, the monetary policy, not monetary policy, the taxes and the fiscal interventions from on the private sector. Do you agree with him?
Well, a lot of companies say that they are holding back, waiting to see what happens both in Europe and with the fiscal cliff. Companies have a lot of money. They don't need to borrow a lot at present. Small businesses say they don't need to borrow a lot at present because demand is low. So it doesn't seem to be a question of the price of money, which is what the Fed controls. It seems to be more a question of confidence and companies and individuals deleveraging, getting rid of their debt. Once that's accomplished, the economy will pick up. But until that happens, it doesn't look like we're going anywhere very quickly.
When is the economy going to pick up? We've seen a very fragile, very sensitive, and also mixed data, right? In terms of the economic data coming at us with the non-farm payrolls, and also the previous data being revised to 65. It was 80,000. It doesn't look too promising, 8.3%. I know everyone was very happy with what they saw, but looking at the bigger picture, it's mixed.
Well, they were happy. They were happy because it could have been worse.
It could have been worse.
But
that's good, yes.
It's going to take a long time, and probably you won't see the economy significantly improve until the middle of next year or closer to the end of next year. But in the meantime, we'll probably just grind along where we are. There isn't a feeling that it's going to get a lot worse, that we're going to see the economy slow more than it is.
Until the mid next year, you said, right? That's very good to know. And here, today's data came. U.S. jobless claims unexpectedly fall as labor market mends. What did we see last week? It increased, right? And then everyone thought about the automotive sector.
Well, in the United States, a lot of the auto plants shut down during the month of July to retool their plants for the new model year. We also see some factories close in the textile sector for vacations, and those workers are eligible for jobless benefits. So it's hard to tell what the underlying strength of jobless claims is during the month of July. Now we're out of July, moving into August, we get a little bit more of a clean read, and the fact that claims went down, that they're continuing their downtrend, is good news. It tells us that companies aren't cutting back right now. They may not be hiring a lot of people, but they're not cutting back in anticipation of a recession.
But they're not hiring either. Productivity increased by 1.6% on an annual rate yesterday, but we realized that the employers were squeezing the dime out of the employees. Should we be happy or sad about it? How did you read that?
Well, it's a mixed picture because it does show the economy is slowing down, but it also suggests that companies, if business picks up, are going to have to hire because they can't make up the additional orders with the employees they have.
And again, another data today, Mike, talking about today's data, which is another important one. The trade deficit in the U.S., it narrowed more than the forecast. What were we expecting? 47, but the gap shrunk 11% to 42.9. I think it's the smallest since when? 2010.
Yeah.
How do we read this? Is it good or bad for us?
Oh, it's very good news. Exports were at a record from the United States, shows that companies here still producing and still selling overseas, even though the dollar has gotten a little bit stronger. Oil prices fell, so that's one reason we saw a big drop in imports. The two combined to lower the deficit. But with a lower deficit, it means a higher GDP number here. So second quarter GDP will probably be revised up a little bit.
Oh, I'm so happy to hear all the hopeful news from you and analysis. I know you go beyond and above all these numbers and you interpret them accordingly. One last question about your hit today in the U.S. It's interesting, it's different. It's about vacation time, and some countries are taking, some are not. And then is it beneficial or not? Can you tell us about that hit, and how does it affect the economy? I really was interested in
Well,
this.
in August, everybody tends to take vacations around the world. In Europe, it's almost mandated. It's considered a basic human right. It's been given legal protected
mandated, right? That's true.
status, and countries like Spain and Portugal and Italy give people more than a month of vacation, paid time off a year. But what economic studies have shown is that the more vacation time you take at one time doesn't necessarily make you happier. That the optimal amount of time off at any one time is about 10 days, the week plus the weekends on either end, and that you get most of your enjoyment from the vacation in the weeks leading up to it as you plan for it, that your mood changes rapidly once you get back to work and reverts to where you were before.
And China never takes vacation.
Well, the Chinese have the lowest number of days of vacation, about 5 days for beginning workers in the industrialized world, and they also have the fastest growing economy.
Okay, I promise I won't take more than 7 days, and my producers will agree with that. Thank you so much for coming. Levent, bu güzel sohbetimiz, söyleşimiz burada sona erdi. Söz tekrar sizde İstanbul'da.